Welcome back, everyone. Thank you for sharing into our show, the financial news in Palos Heights. And today is November 15, 2021. Paul Munichel from Ameriprise is my co-host. Paul is going to give us an update as to what took place in the marketplace. And Paul, I will read off the latest information that came in this morning from Ameriprise, also what's going on in the immediate.
Thanks, Ron. Today's show, I want to focus on Q3 earnings and dive into that data a bit. So, retailers to set the stage for a complicated holiday season. Through last Friday, approximately 92% of S&P 500 companies have reported their Q3 financial results. Now, of those yet to report, retailers, including many of the market's largest and well-known names, dominate the short list of those still on the docket for this week and next. Now this week, investors will be eager to hear the holiday season outlooks of such names as Walmart, TJX, Home Depot, Target, and Lowe's. Expectations for the upcoming holiday season are high, and these reports should go a long way in influencing expectations and sentiment as we head into that holiday period. Heading into the week, the S&P 500 aggregate earnings per share were seen as growing by about 39% year over year, on sales growth of 17.5%. Now that versus a 5-year average of 5.8%. On a dollar basis, aggregate earnings per share for the period are at $53.62. This blended estimate, actuals plus estimates, for the quarter is $4.92 higher than where estimates stood at the end of the quarter, which was September 27th, and $6.17 higher relative to where estimates started the third quarter back in June 30th. Understandably, the word inflation has become a common point of discussion on both corporate earnings calls. So, which sectors are expected to see the greatest benefit or challenge from these rising prices? Well, according to FactSet, profit margin expectations for Q4 have come down. That's since September 30th. And the consumer staples, consumer discretionary, and the industrials sectors. While they have increased in the energy sector by a strong 2.2 percentage points. And less so in the real estate, financials, materials, and the technology sectors. So there's lots of data mentioned in these points today. We've talked about inflation again. We've talked about how earnings should be affected by supply chain issues and other shows. There's a lot going on here. Nothing necessarily new to add, just those updated numbers. And hopefully companies can continue to produce high earnings and make money and pay their employees and keep the economy going. And
of course, they're saying that there's Kohl's, and I don't know what other retail box store is saying, well, we're projecting the sales are going to be down from expectations, and obviously if they have empty shelves,
that's going to be a problem. Yeah,
that will be a problem, but we'll see what happens. There's some time to recover, and how much of that recovery will help the Christmas shopping remains to be seen.
You made a good point. How do you buy something that's not there to be bought?
Yep.
So people may want to spend money, but if it's not in the stores to buy, I guess you can go online, but even that sells out. So I don't know. We'll see.
Yeah, a lot of sales flyers are going to be questionable now that they usually send out for Christmas with bargain deals. And, well, if they don't have it, they're not going to send the flyers out. So that's
right.
A really precarious situation. But this morning's information we got from Ameriprise, I wanted to share the U.S. stocks futures are modestly higher to kick off the week of earnings in retail and technology.
Yeah, I mean, I kind of just reported on that. So the earnings are looking so good so far, and we want to keep them going, though.
Exactly. In sometimes it's all rhetoric because we don't know where it's going.
Exactly.
Europe is mostly higher, while markets in Asia finished mixed despite better than expected economic data in China. And I don't know how much of that is accurate.
Who knows what to believe? But if they're, I mean, it seems like their situation's similar to ours. Earnings are going up, the market's going up. Seems somewhat believable, but you never know.
And U.S. Treasury yields, gold and WTI, and that's oil, are trading modestly lower. That's somewhat encouraging for at least the oil.
Yeah, modestly being the key word there. I don't know
Yeah.
if it's enough to affect anything,
Yeah,
but
right. So that we see a relief at the pumps.
right.
Merger Monday on the real estate sector with deals in the data center and infrastructure segments. I guess there's going to be some more information coming out today on that.
Yep.
What's interesting is the year-to-date percentage returns. Listen to this. The S&P 500 is a plus 25%. Dow Jones a plus 19%. Actually, almost a 20% because it's 19.7. And the NASDAQ is a plus 23. How solid is that?
Solid. I mean, just staggering numbers. As we've been saying pretty much every week all year, these returns are just staggering, and we'll take them while we can get them.
Yes, boy, you said it right there. I was listening to your report, and I'm thinking, if we can only keep this going, or, you know, we've had some minor corrections in this last few weeks,
Yep.
month or so, but we're able to sustain that and move forward again.
I just want to keep it coming for as long as it can keep coming, you know?
Yeah. Especially for your clients.
Right.
Okay, well, thank you, Paul. Stay with us. We're going to be right back. Paul is going to have an interesting topic for your money. We'll be right back. And we're back with the show called Your Money. Paul usually has an interesting topic, and of course today, preparing for a financial side of the holiday. Boy, you're not kidding. This should be interesting. Paul, take it away.
Yep, we kind of talked about it in the first half of the show. The holidays, of course, are coming up, and you know, today we want to talk about things that we should be aware of. We know the holidays can push budgets past their limit as people do more entertaining, attend more events, dine out, and participate in gift exchanges. So whether you're gathering in person or celebrating at a distance, this year it will be tempting to overspend. So today we're going to go over a few tips to help you plan for a less financially hectic 2021 holiday season. So first, as always, create a holiday budget. The last month of the year offers many opportunities to splurge. Prevent unfettered spending by setting a do not exceed dollar amount for holiday-related expenses. Include all purchases tied to the season, from gift giving to refinishing your holiday wardrobe to buying decorations, entertaining, and more. As always, again, you want to track your expenses. A budget is only useful when you track your expenses against it. Keep receipts for purchases and tally expenses at the end of each shopping excursion. Check your totals to make sure you're not exceeding your budget and are prepared to make returns if you have to. Of course, manage your expectations. The COVID-19 pandemic continues to affect global supply chains, like we already talked about, causing many disruptions in many different and surprising product categories. Merchants of all sizes will have product shortages and may offer less merchandise choice overall. Prices will be higher too, driven by increased demand, inventory shortages, and higher than normal inflation. And don't expect fire sales as we get closer to the holidays. Retailers will be unlikely to discount products that are flying off the shelves. You may want to consider shopping early. You know, more than ever this year, you're going to want to give yourself plenty of time to do your holiday shopping. Both brick and mortar and online stores will be affected by the supply chain challenges. You're going to need to be flexible. You might have to spend more time looking for what you want. You may need to switch gears if you can't fulfill your initial wish list. And if you need to ship your gifts, keep in mind that the holidays always cause shipping delays, but this season the slowdown is predicted to be greater than usual. Plan for increased shipping costs, so in addition to inflated prices on general merchandise, shipping costs are spiking upward as well. The U.S. Postal Service has announced price hikes, and other major shipping carriers are also raising their prices to counteract those higher oil prices and staffing shortages. Maybe you want to give differently this year. So if the gifts you want to buy are in short supply, or things aren't your thing, consider ticking off your gift list by giving experiences. Local restaurants are eager to make up for lost months of businesses. Likewise, theaters and sporting events are finally opening up and need to fill seats that have been empty for too long. You could also consider giving financial gifts to your loved ones, such as partially funded savings accounts, Roth IRAs, savings bonds, or an appointment with a financial advisor. And finally, charitable donations are becoming more popular as holiday gifts, particularly if the nonprofit is meaningful to the recipient. A lot of different options, a lot of different things to consider, but wanted to give you a lot of things to think about.
And for all the reasons that you just mentioned, Paul, our family's actually looking at memberships into things, and one I'll use as a membership to the zoo.
Yeah.
For the year. And it's a little bit on the high side, but you're taking care of your family. There's a place to go to enjoy.
Yep.
And you don't have to scurry around trying to find merchandise that is not there, or you're going to pay dearly for it, or pay for the shipping of it, which may not be there on time. So all of that can be resolved by things of that nature that you had already mentioned.
Yeah, you hit all the points there. Like, that's that experience gift giving, something that's not a thing, not something tangible. You can go experience it and live your life in an exciting way, maybe with some of these different options.
Yeah. Well, thank you, Paul. And for Paul Munico with Ameriprise Financial, myself, Ryan Jankowski with Channel 4 and Palos Heights, we wish you good investment day.